One word. One single word from Donald Trump moved $8 trillion across global markets. Stocks ripped, oil cratered, and Bitcoin did absolutely nothing. That's not a bug. That's the most important signal in finance right now, and most people completely missed it. Stay with me for the next 7 minutes because I'm going to show you exactly why Bitcoin's silence is screaming something every serious investor needs to hear. Here's what happened. Trump posted "Ceasefire" on Truth Social, referring to potential de-escalation in the Middle East. Within hours, the S&P 500 futures jumped 1.2%. Defense stocks took an immediate hit, and oil, Brent crude dropped over 3% in a single session. This is textbook geopolitical market behavior. Peace signals mean less demand for oil, less uncertainty, more risk appetite. Traders have been running this playbook for decades. But here's where it gets interesting. Bitcoin, which is supposedly the most volatile asset on the planet, which critics say trades like a leveraged bet on chaos, Bitcoin moved less than 0.5%. Let me put that in perspective. The so-called digital gold showed less reaction to a major geopolitical headline than actual gold did. Gold moved nearly 1%. Bitcoin flatlined. Now stop for a second. This contradicts everything mainstream finance has been telling you about Bitcoin for years. They said Bitcoin trades with risk assets. They said it's just leveraged NASDAQ. They said when uncertainty spikes, Bitcoin spikes or crashes with everything else. But that correlation, it's been breaking down for months, and this ceasefire moment just proved it in real time. Pull up the 90-day rolling correlation between Bitcoin and the S&P 500. In 2022, it hit 0.8, meaning they moved almost identically. Today, it's hovering around 0.2. That's approaching statistical noise. Something fundamental has changed. Now here's where most analysts get this wrong. They're looking at Bitcoin's non-reaction and saying the market is dead or crypto is boring now. That's a surface-level take from people who don't understand what's actually happening. Bitcoin didn't react to Trump's ceasefire post because Bitcoin is no longer trading on the same narrative as traditional risk assets. The marginal buyer of Bitcoin today isn't a retail trader panic buying during geopolitical chaos. It's institutions with 12-month allocation timelines. It's corporations adding it to treasury reserves. It's ETF flows that move on weekly schedules, not tweet cycles. MicroStrategy isn't checking Truth Social before their next purchase. BlackRock's iShares Bitcoin Trust doesn't rebalance because of a one-word post. The holder base has fundamentally shifted, and that shows up in moments exactly like this one. But wait, there's another layer here that nobody's talking about. Look at what did move Bitcoin in the same week. When the Federal Reserve minutes came out with slightly hawkish language, Bitcoin dropped 2.3% within hours. When jobs data surprised to the upside, suggesting rates stay higher for longer, Bitcoin reacted immediately. See the pattern? Bitcoin is decoupling from geopolitical noise, but it's coupling more tightly to monetary policy signals. It's trading less like a risk asset and more like a liquidity-sensitive store of value. That's not random. That's exactly what you'd expect from an asset maturing into a legitimate macro instrument. Now here's what this means for you practically. If you've been waiting for geopolitical chaos to pump your Bitcoin bags, you're running an outdated playbook. That trade worked in 2020 and 2021 when retail dominated the market and narrative drove everything. Today, the signals that move Bitcoin are different. Fed policy, dollar strength, real yields, ETF flow data, institutional accumulation patterns. The Trump ceasefire non-event is proof that Bitcoin is graduating from speculative toy to genuine macro asset. And history shows that assets making this transition tend to get repriced significantly higher over time, not because of hype, but because of expanding buyer bases and new allocation frameworks. But here's the uncomfortable truth. Most retail investors will miss this shift entirely because they're still watching the wrong indicators. They're still waiting for the chaos pump that isn't coming. Meanwhile, the smart money is accumulating during this exact kind of sideways consolidation, when headlines create noise but Bitcoin's price holds steady. So what should you actually do with this information? First, stop trading Bitcoin on geopolitical headlines. The correlation isn't there anymore and you'll get chopped up. Second, Start watching Fed expectations and ETF flow data. These are the new leading indicators. Third, and this is critical, recognize that boring, non-reactive Bitcoin is actually bullish for long-term holders. It means the asset is stabilizing. It means the holder base is getting stronger. It means when the next real catalyst hits, the move will be driven by institutional flows, not retail panic. The ceasefire post was a test. Stocks and oil failed it. They still jump on every headline. Bitcoin passed it. That difference will matter more than most people realize over the next 18 months. If this kind of analysis helps you see markets more clearly, subscribe right now and hit the bell. I break down these institutional signals every week while everyone else is chasing headlines. Don't just react to markets. Understand them.